Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1243, and today's date is March 31st, 2017, and the title of the episode is, Last Two Times the Government Reported Data Like This? Well, you remember 2008. Let's get into the economic collapse financial news. Now, we are continually seeing the chaos in the market, usually on Fridays. They like to pump the market up and make it look really good for the weekend. Well, it looks like this time they just couldn't do it and the market finished down. And we're starting to see that the market at this point, well, it's fluctuating quite a bit. And as we move forward, we're going to see a lot more of these fluctuations. And we're seeing a lot of signs. We're seeing a lot of financial advisors, financial pundits. They're all coming out saying, okay, it looks like we have some type of problem here. And it looks like the market might be overheated. And it looks like we might be coming into some type of correction. Now, when we look around, and we've been looking at all this data, we can see that we're in big trouble right now. I mean, we've looked at everything. And it is one gigantic illusion after another illusion to cover up what's really going on. And then we have, the conference board telling us that consumer confidence is very high. We have the UMich, which just came out today, and it is reporting that there is uncertainty in the air. And we can see right now that things are rapidly deteriorating. And when we look at the UMich, we see that expectations for higher incomes, well, that has declined. And the timing for buying a home, buying a car, or major appliances, well, that also has declined. People are starting to wake up and realize there's a problem. Now, when this system collapses, and it's on its way, I believe we're already in a recession. I've seen so many economic indicators that we've reported on that we all now see that there's a major problem. I mean, in a recovery, in an economy that's strong, do you really see this many employees in retail being laid off? Do you see really this many stores closing? And we've already proven that it's not online sales, because that's only 1/10 of the retail market. I know they throw out numbers like, $3 billion worth of retail sales, but you need to put that into perspective. And that's just a small little portion of it that's going to online. And what we're seeing right now is things are really looking bad. Now, when this market comes down, and that is going to be the red flare that shoots up into the sky that lets everyone know that the economy is in trouble. And everyone's going to be scratching their head going, how did this happen? It came out of nowhere. Well, it really didn't. And we can see right now that we've been talking about this, that the pension funds, they're going to be in a lot of trouble. And this is going to spread across the country. And it's not just myself saying it. It's not just other alternative sites saying it. We're already hearing it from Bloomberg. And once these type of news organizations pick up on it, well, the issue has gotten so big they can't ignore it anymore. And what we're seeing right now is that we're heading into this pension crisis, which is going to be too big for markets to ignore. And we mentioned, Dallas, we mentioned South Carolina, we mentioned all these different areas where pensions, well, they're starting to implode on themselves. They're underfunded, and they just will not be able to pay out when everything starts to fall apart. Now, the truth is that pension plans, not just in Dallas and South Carolina and these small little areas, pension plans all over the country are severely underfunded. And this has already resulted in local fiascos like we talked about, Dallas, South Carolina, and many other areas. Now, according to Bloomberg, unfunded pension obligations on a national basis have risen to $1.9 trillion from $292 billion since 2007. I mean, think about this for a second here. $1.9 trillion. Now, as was the case with the subprime crisis, the writing right now, well, it appears to be on the wall. And it looks like we're in big trouble. And what we're seeing right now is that they've used these tricky accounting methods, and they basically hidden a lot of the numbers. And these unfunded pension obligations that have risen to 1.9 trillion, well, 1.9 trillion number is not actually the real number. Now, I know Bloomberg is reporting on this. They're telling us it's 1.9. And every time they report on something like this, we know it's a lot bigger. And what we're seeing right now is that the article goes on to admit that if you use honest math, I didn't know there was honest math and dishonest math. I thought it was just math. I guess we've come to the point in time where there's two different types of math. Because dishonest math is, criminals trying to hide things. I didn't know governments were trying to hide and pension plans were trying to hide. But it turns out that I guess all these individuals are now criminals. Because the honest math shows the number closer to $6 trillion. Now, we know the Fed has the ability to keep the stock market up. We know that they're continually doing this. But when things start to fall apart, when the market comes down, as we can see they're raising the rates, well, what's going to happen? The entire pension system, it's going to completely fall apart. And a lot of people are going to be hurt this time. I mean, 2007, it was $292 billion. This time, it's $6 trillion. It's going to be a nightmare for everyone. So think about this. Just like in 2008, with the derivatives that have been layered into the mix, the embedded leverage in the commercial mortgages is the financial equivalent of the Fukushima nuclear power plant collapse. The coming stock market crash is going to hit pension funds even harder. Stocks, we know, are ridiculously overvalued right now. And if they simply return to normal valuations, pension funds are going to lose trillions of dollars. We're talking about a financial tsunami that will absolutely be unprecedented in our history. And all these investors, they continue to act like the party can last forever. Now, didn't this happen during 2008, where all these individuals that were trading these subprime securities, buying real estate, they thought the housing market was going to continue like this forever. Prices were going to go up. We're going to make a lot more money. We're going to sell these houses. It will never end. Why? Because housing doesn't come down. Well, everything came to a screeching halt, and it will come to a screeching halt once again. Now, we have the Atlanta Fed out there once again. They brought the GDP estimates down to 0.9%. Now, today we had a disappointing consumer spending data that came out, and it doesn't look good. So they lowered GDP once again to 0.8%. This is not looking good. We're seeing a lot of chaos happening in the month of March going into April. Now, we can see the market, it continually moves up. And Wall Street claims the surge in stocks is based on rising corporate earnings. We know this to be completely fake, phony, and false. So let's see. The Commerce Department's Bureau of Economic Analysis, they released their third estimate of fourth quarter 2016 GDP and corporate profits today. The second revision of its first estimate of January 27th contains more data and is considered a more accurate approximation of what happened in the vast, hard to quantify U.S. economy. Corporate profits, despite stock market that has been surging for years, are even worse. A lot worse. They've declined for years. In fact, they declined for years during the prior two stock market bubbles, the dot-com bubble and the pre-financial crisis bubble. Both ended in crashes. However, Wall Street remains silent on this. They're not even saying anything about it. Because I guess if that information was out there and it was reported on, people would be selling stocks like crazy. So they're pretending it just doesn't exist, like everything else. And when we look at the corporate profits, we can see right now they're absolutely awful. In the fourth quarter, profits rose to $2.15 trillion, seasonally adjusted annual rate. That's what the annual profit would be after 4 quarters at this rate. But profits in the prior 3 quarters were lower. And so the fourth quarter brought the year total to $2.085 trillion. This was down from 2015, and it was down from 2014. And when we look over this period, starting at 2013 or so, we see that corporate profits have been declining. And guess what happened during the pre-crisis bubble back in 2006, going into 2007, going into 2008? Corporate profits were declining. Very interesting. So we're seeing the same thing once again. So let's put all this into perspective. We're seeing corporate profits decline, but the stock market is surging. I mean, think about this for a second. Every time that this has happened, or the last 2 times, well, it didn't end well. Now, we also looked at the Fed raising the interest rates. When we look back to 2006, 2007, they were raising the interest rates into an economy that was completely falling apart, where the subprime securities, they were completely garbage. Speculators were purchasing homes. The market was at 14,000 points, very high. That started the chain reaction, and everything started to fall apart. So when they started raising interest rates, corporate profits in 2006 started to decline at that point. Here we are once again where corporate profits have been declining since 2014, but the market has been continually moving up. Same thing in 2006. Corporate profits were declining and the stock market was moving up. The Fed was raising interest rates from 2006 on to start the chain reaction. Here we are in 2017, or actually in 2016, where they started raising the rates. Actually, going back to 2015, they did it once, 2016, and then 2017 another time. They're already starting the same exact pattern. So once again, we are seeing the same information, the same indicators, letting us know that we're following the same path, which means we're going to end up exactly how it was in 2008, except for one big problem. It's going to be about 100 times worse. This time, it's going to be a complete disaster because they didn't fix the problem. All they did was take out another credit card, another credit card, another credit card, and pretended that we had all this cash. They pumped up the banks, they pumped up the stock market, made everyone feel good. Now, it wasn't everyone, because we know that there was a lot of Americans who are getting hurt by this, but the news doesn't report on it. People get food stamps, and you don't actually get the paper stamps. You get the little card that you use and you swipe it. It looks like a credit card, so nobody really knows that you're even on it. And all these individuals, that's why we saw the food stamps rising over these years. This is why we see more people being not included in the unemployment numbers. This was all done on purpose. Well, we're at that point already where the whole thing is coming to an end. It came to an end in 2008. If I was talking like this in 2006, people would say you have no idea what you're talking about. The economy will never crash. Look at the prices of the homes. Look at the stock market. But again, look what happened in 2008, 2009. Here we are in 2017. Nothing has changed except it's gotten a lot worse. So get prepared for what is coming. When I say get prepared, cash on hand, gold and silver, protect your wealth. Food. Why do we need food? Because if we see it, not if, when we see inflation, do you really want to go out to the supermarket, fight with the people trying to get that $15 loaf of bread or any other type of food? Keep food in your house. Keep water. Keep supplies, batteries. Because most likely, you might not be able to pay for electric. It depends how all this all turns out. You need to be prepared for every situation. Now, all those individuals who are not prepared, and if you haven't listened to the interview with Bix Weir, I did 2 with Bix, he's saying all that currency that's in the bank right now, it's just going to disappear. So people are going to be freaking out. And once capital controls come into effect and the banks shut down and you can't get your funds out, according to Cliff High, he said this is going to happen this year, people are going to be scrambling. They're not going to know what to do. So you're going to need some type of weapon to protect yourself. Am I going to say go out and shoot people? No, absolutely not. But you don't know how the situation is going to work out. Do I say help your neighbor? Absolutely. Because most likely your neighbor is not going to know what is happening. If you have enough food, if you have enough water, you need to talk to them at this point. I mean, you can try talking to them ahead of time. A lot of people are very close-minded. They don't want to hear any of this. But at this point, those people that you know, you need to bring them in. You need to say, calm down, we're going to get through this. I know exactly what's going on. I've been following this for a very long time. So When I say get prepared, this is what I'm talking about. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.